Welcome. In this video, will Xcn coin experience a big bull? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand. When we take a broader look at the chart, we can observe that the price has been moving within a large and long-followed pennant formation. These types of large pennants are usually indicative of energy that has been building up in the market over a long period. Although the price makes small moves up and down within a narrowing range, this consolidation gradually intensifies the stored energy. And it's important to understand this. When the price eventually breaks out of the pennant structure, the release of that built-up energy often triggers a very strong and sudden move. Analyzing the current situation, it appears that the price is getting very close to breaking out to the upside of the pennant. If the price manages to break above the upper boundary of this pennant formation with strength, we could see a rocket-like upward move in the coming period. This breakout could serve as a significant trigger, not only for short-term traders, but also for medium and long-term investors to start buying. Breakouts from pennant formations are usually accompanied by high volume, which further increases the speed and intensity of the move. When a breakout occurs from such a large pennant, the targets are typically set based on the length of the pennant's flagpole. In other words, however high the initial rise was at the start of the formation, a similar-sized move can be expected after the breakout. This means that the price could potentially reach new target levels well above its current levels. Particularly, breakouts from these large formations often lead to significant changes in market psychology. After the breakout, fear tends to give way to euphoria, and, with the onset of FOMO, fear of missing out, buying activity can accelerate even more. Of course, one of the most important things to watch here is whether the breakout is a true breakout. That means the upper boundary of the pennant must be broken clearly and with volume, not just with a small wick. If the price makes a fake breakout and returns inside the pennant, that would be a misleading move and could delay the bullish scenario. However, considering the current technical setup and the level of price compression, the probability of an upward breakout seems to be stronger at this point. In conclusion, the price is currently in the final stages of a massive pennant formation, and a potential upside breakout here could generate significant momentum in the market. If the breakout happens as expected, the price may not only surpass current resistance levels, but could also soar to much higher levels, as if breaking free from its chains. That's why it's crucial to closely monitor price action and how the breakout unfolds in the upcoming period. But looking only at trends is not enough. We must also consider other metrics. Stay tuned. When we analyze the chart in depth, it becomes evident that there is a noticeable similarity between past price behavior and the current price action. In particular, a scenario from the past appears to be repeating almost identically right now. Back then, following a strong upward rally, the price paused at a certain level and moved sideways within a very narrow range for a period of time. This sideways consolidation phase indicated that market participants were gathering strength and making decisions. These types of horizontal formations are signs that the market is preparing to choose a new direction. Once the consolidation phase ended in the past, the price experienced a much larger and more voluminous upward move. This breakout was even stronger than the previous rally. That's because such sideways periods act like a bow being drawn. Patient investors unleash a powerful move the moment the breakout occurs, pushing the price sharply higher like a released arrow. We are currently witnessing a very similar setup. Just like before, after the initial push, the price has become compressed within a defined range and hasn't clearly chosen a direction yet. However, the duration and intensity of this compression appear even more pronounced than in the previous case. This suggests that any potential breakout could be even more dramatic and powerful. As the consolidation phase extends, the intensity of the breakout increases as well, since both buyers and sellers have reached the limit of their patience, leading to high-volume trades when the breakout finally happens. One of the most important features of such patterns is that if the breakout occurs to the upside, it can not only reach previous highs, but even surpass them. The current chart suggests a potential not just to match previous peaks, but to move well beyond them. Especially with the price hovering near the upper boundary of the consolidation zone, this indicates that an upward breakout could begin at any moment. Additionally, unlike the similar situation in the past, there may now be supportive factors in the macro environment and overall market dynamics. This means that the price could find support not only from a technical standpoint, but also from a fundamental analysis perspective. Therefore, observing this period carefully and patiently is extremely critical in terms of catching a potentially major upward opportunity. In conclusion, an even larger and possibly much sharper rally than the one we saw in the past could be just around the corner. The current compression and consolidation are like the calm before a volcanic eruption, Patience has always brought great rewards in this market, and this chart formation may be offering an incredible opportunity for those who wait. If the price manages to break out of this consolidation to the upside, new highs may be just the beginning. The price could move towards significantly higher levels with strong momentum. When we take a closer look at the RSI indicator, we can clearly see a well-defined descending trend structure on the chart. This trend line has formed a strong resistance level that the RSI has been unable to break for a long time. The pressure built up on the RSI in the background of price movements is one of the key indicators of weak momentum in the market and the difficulties buyers are facing in gaining strength. At this stage, the RSI value is once again approaching this descending trend line. This critical trend line has been tested multiple times in the past, but has consistently created downward pressure on price. That's why this area is highly significant. If the RSI fails to break this trend, selling pressure may continue in the market, and prices could potentially drop to new lows. However, in the opposite scenario, if the RSI breaks this descending trend to the upside, it could mark the beginning of a very different story for the market. A breakout of this trend line by the RSI would be an extremely important signal from a technical analysis perspective. That's because trendline breakouts in oscillators like the RSI are often considered leading indicators of reversals in the price chart. If the RSI value manages to break above this restrictive trendline and hold there, it could completely shift the market's momentum. Sellers would be weakened, and buyers would step in with strength. In such a scenario, we could also begin to see resistance levels on the price chart start to fall one by one as the RSI breaks its trend. Especially after RSI trend breakouts, price movements are typically high in volume, stable, and sustainable. This indicates not just a short-term rally, but the potential start of an uptrend that can continue into the medium and long term. Moreover, the descending trend line we're observing on the RSI holds great importance in terms of investor psychology. The RSI surpassing this level would be the clearest sign that confidence is returning to the market and that buyers are beginning to take control. There's a well-known principle in technical analysis. When momentum oscillators break trend lines, price usually follows with a similar trend breakout. So this potential RSI breakout would serve almost like a catalyst for the price to break out of its own descending trend. Markets that have been under prolonged sideways or downward pressure often tend to launch strong rallies after a trendline break in oscillators like the RSI. Therefore, a close above the current descending trend line on the RSI would not just be a technical detail, but a highly significant signal that a new market cycle may be starting. Such a breakout would shift investor expectations, accelerate fresh capital inflows into the market, and create a foundation for stronger upward waves. To summarize, a breakout of this descending trend line on the RSI would be extremely critical both psychologically and technically. If this breakout occurs, the entire structure of the market could change, and prices could accelerate upward toward much higher levels. That's why closely monitoring this RSI move is crucial for timing our investment decisions properly. Such a breakout could unlock not only short-term trading opportunities, but also a strong long-term uptrend. Patience is key. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.